Hi everybody and welcome back to the channel. So the portfolio is at 23,515 and 71 cents. I have two accounts. I have an RRSP for $1,200, which is up 17%, and a TFSA, which is at 22,312, which is slightly up. And there's quite a bit of news to get into. So there's a lot of company earnings and some dividend raises as well. So I'll get into the TFSA first, but I did make a buy in my RRSP this week. So please leave a like and subscribe to the channel, and let's get into the update. So in the TFSA, we have Apple going up a lot after their recent earnings, which I thought were just okay. I don't think they were fantastic. One major thing I would say is the decline in their Mac sales was about 30%, but that does make sense. It's similar to Microsoft's, 26% decline in their devices, and as well, Intel had a 36% sales decline in their revenue. So there is a big slowdown in PC demand, but their iPhone sales were actually better than expected. So overall, the company jumped up after the earnings, and they did announce a dividend raise of 4%. So that's nice. I mean, I would have liked a little bit more, but considering Apple didn't really earn that much more, didn't show much growth just due to some of their segments kind of stagnating or even declining, like in the Mac sales, I'll take it. I'll take the 4% dividend raise. And we have big news with Aritzia. So they showed their earnings and the stock just plunged as much as 25%. And this is really making me think that, I shouldn't be taking these earnings to heart. Like, I shouldn't take the market's reaction to them. So, for example, I thought Apple's earnings were kind of, okay, just not really that great. But then this stock jumps up. Aritzia had fantastic earnings. Like, they had a lot of growth in their revenue, a lot of growth in the United States, a lot of growth with their e-commerce, and the stock just sold off like crazy. So what did I do? I bought 8 additional shares, going from 24 to 32 shares. I was very excited to see it drop. In fact, I thought after the earnings, the stock would jump up to 50, not go down to as low as $33. And from what I've read, people are worried, at least some analysts are worried, that because they're growing so quickly and the management said on the earnings call that they need to focus on building their infrastructure, investing in new stores, that this is going to be a year of investment, and it's going to cause some margin compression, so they won't be quite as profitable. But I mean, it's just a slight decrease. And honestly, I think if they have to invest into themselves because to meet future demand, I mean, I think that's a good thing long term. Maybe it's not a great year for Aritzia this year. And of course, analysts are also worried about a potential recession, rising interest rates. We had the Fed, raise the interest rates by another 25 basis points recently. So I'm not worried about Aritzia in the least. I actually think long term it's a great hold. And I actually did liquidate some of my, I trimmed my Google positions slightly. I sold 0.62 shares to get an additional 3 shares of Aritzia because I just thought the price was just too good to pass up, and I definitely took advantage. And I'm not going to be afraid because I love the earnings report. And if the market is just going to get it wrong and hand me a gift of a 20% discount, I'm going to take it and I'm going to load up on it. So not worried about Aritzia over the long term. And I also bought one more share of Brookfield Corp. So we went up to 31 shares. I bought one more share of Scotiabank, just because all the American banks reported very good earnings. Even EQ Bank in Canada reported some good earnings. So I am anticipating that the Canadian banks are going to have some great earnings and may have a bit of upside in the short term. So definitely going to buy these stocks while they're kicked down a little bit. Here you can see that I trimmed the 0.62 shares of Google, so we're down to 4 shares of this one. With Smart Centers, I purchased 2 more shares, going up to 55 shares. And then with Telus, they also had a dividend raise of about 3.6%. So they raised their dividend about, roughly twice a year. So they did 3.6 now. They should do about the same in another 6 months. So always nice to see that. So we got a little bit more income in the portfolio as a result. With TD Bank, I purchased one share, and then I bought some fractional shares using the dividend income I got from TD Bank. So I bought 1.46 shares of TD Bank. And some major news with that is that the First Horizon deal has been canceled. And from the reports, it looks like it was mutual on both sides, that they both agreed to just walk away from the deal. And TD is going to have to pay a breakup fee of about $225 million, I believe it was. And overall, it doesn't seem like a great time for TD to be paying like $13 billion to buy a regional bank, especially considering that when they made that offer, the U.S. was not having these smaller banks collapsing. So this may actually free up TD to make a better acquisition, or just take their time to expand slowly into the United States. And I think just having their name and being known as a Canadian bank, that they should yield a bit more trust from the public in the States, at least in my opinion, versus like a smaller bank. So overall, I'm not unhappy that they didn't go ahead with the deal, but it would have been nice for them to buy it or even renegotiate the price. But I mean, if they think that it's best to just call off the deal, then I'll trust their judgment, because TD is very well managed, and it's one of the reasons why it's one of my largest positions in my portfolio. In the RRSP, we're at 1194.26, up 17% all time. And Starbucks also showed their earnings, and they were actually quite strong, but the stock sold off. Again, that doesn't really make sense when Starbucks beat their top line, bottom line expectations. They even reaffirmed their outlook of growing their earnings per share by 15 to 20%. So, I mean, overall, and they had a bit of a recovery in China, since, they're not locked down anymore. So a lot more business in China. So that's one notable thing from them. And I also had an earnings report from Vici Properties, which was very, very strong. I think they raised their adjusted funds from operation by 18%. Their revenue just went up through the roof, and the stock sold off as a result. I mean, it made no sense. So I took the opportunity to buy 2.7 more shares of Vici Properties. So, I mean, just to sum up, I had three companies that had very good earnings reports, and then the stock prices drop. The market isn't always going to make sense. That's why, you're going to have stocks that are overvalued and undervalued at any given time. And sometimes it's just short-term sentiment or outlook. You have to keep in mind that, people that are trading short-term are just looking at the next 12 months. They're not looking beyond that. So, if they think that a company won't do well in the immediate future, they might sell it off today, even though long term it might be a mistake, or vice versa. Maybe you bid up a company too much and you give it too much credit. But I think in the case of Starbucks and Vici, they just had excellent earnings reports, and their sell-offs are not justified. So I'll be very happy to acquire more shares. I'm not buying any more Starbucks at this point, because I think they are pretty fairly valued, if not slightly overvalued. Vici, I think, is trading at a decent price. Even SCHD had a little bit of a dip recently, down 7%. So I might be buying more of these two, mainly just because Starbucks, I think, is a bit too expensive. But SCHD and Vici seem like good buys, at least for me and my RRSP. And if you want to get started with investing, feel free to use my link for WealthSimple in the description below, and you can buy Canadian listed stocks and ETFs with no commissions, and you do help support the channel. So the dividends earned all time are $13.90 and 6 cents. My annual dividend income has increased, so we're back over $1,000 a year. This used to be as high as $10.29, but H Yield had that big dividend cut in the previous update, so But I did buy quite a few stocks, and Apple and Telus both raised their dividend income, so we went from 985 to 1,009.87 per year annually from the portfolio. Monthly, we went up over $2, so up to 84.16 versus 82.13 from the previous update. Weekly average has climbed from 1895 to 1942. Daily, we're making $2.77 per day instead of $2.70. The months to earn $1.19, to earn $100 is 1.19 months versus the previous 1.22. And then the hourly wage has increased from 47 cents to 49 cents. So overall, I mean, we're just trucking along. Our portfolio, got its raised back up to 49 cents, and we're going to try to get it raised up to 50 cents and then just go from there. So let me know in the comments below, what stocks you're buying in the market right now, and have a good day, everybody.